So we're here with Nick Beecroft, Senior Markets Consultant at Saxo Bank. Nick, could you just start by giving us your outlook for the euro?
Yeah, well, a very interesting and critical few days coming up. This has been a turn of events which the EU would not have liked. These days, 24th, 25th March, are meant to be somewhat days of triumph as the Leaders' Summit announced an agreement on how to enlarge and enhance the EFSF and give us the final architecture of the ESM. Instead of that, we have Portugal blowing up, not having a government and possibly facing a bailout this weekend. There's a 50% chance that happens this weekend even, and if not within the following weeks. I mean, 10-year yields already at 7.7% and without a government for a couple of months and severe pushback on the austerity program that was required, then I think it's virtually definitely going to have that. But then of course the question happens, where does the market focus go from there? And I suspect very quickly it'll move on to Spain, which is a much bigger problem for the authorities.
So do you expect investor confidence to decline on the back of that?
Yeah, I think so. And this leads us to the very interesting question, will the ECB proceed with the interest rate rise which they've telegraphed for the 7th of April meeting? I think it must surely throw that into some doubt. And so to get the answer to that question, you just have to watch the lips of ECB governing council members over the next week. If they're going to change their mind, then there'll be some amelioration of the hawkish tone that they've been adopting so far.
Sure, and we're seeing a difference in policy or a difference, in agreeing between the heads of state in Europe and the ECB?
Well, there has been this great disagreement about whether the various funds, the FSF or the ESM, should be allowed to buy bonds and whether the ECB should continue doing it. I think that the point is that there will be a massive political will to get through to 2013 when the ESM takes over. If you look at that cynically, you can say maybe it's because at the moment the governments rank pari passu with all other creditors in terms of the money that they've invested to bail out the various countries. After 2013, under the ESM, they become senior in the structure of the debt. But the fact is, I think we will cobble through to 2013, but it's going to be a very rocky period, with possibly further calls on the finances of the richer countries during that time.
Sure. So, in summary, what are the risks to investors? People buying the euro. What are the risks to them in short term?
I think there's a risk certainly over the next week that the euro will have a significant setback. The euro has baked into it the fact there will be rate rises starting on the 7th of April, and if that looks like it's changing during the course of next week, I think we can head to 135 if the mood changes on that.